Thanks for joining me on another edition of the Wealth Nation podcast. I am Yolanda Harry Prasad. I'm a wealth advisor, and it is my goal on this platform or any other content of mine that you consume. It's to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. So it's tough times out there. Higher interest rates, higher inflation, and now there's talk of stagflation, recession, eventually deflation. And today we're going to talk about how the rich get richer during times of recession. Because somebody is making money no matter whichever part of the economic cycle we're in. And today we're going to look at recessions, how the rich make money, and what can we do in between to try and make some money as well. So the first thing that the rich do during times of recession is government bonds. A government bond is basically the government's way of borrowing money from businesses and individuals with a pretty decent return and little to no risk. The rich people pick up these bonds and the government pays interest. So the rich see this as a very safe investment because unless the government collapses, you're going to be getting your money and you'll be getting interest as well. More economically developed countries use these financial instruments to regulate the market without the need to print new money and devalue the currency. And South Africa is actually really great at this. Our government gives us some really great returns. Now, you can go online, you can look at SA government retail bonds, but if you want something a little bit more different, a little bit more established where the specialists are doing it, where you're getting a mix of bonds and cash and things like that, reach out. We can chat. Go to www.solomonwealth.co.za, click on the Get Started button, and we can be chatting one-on-one. The next thing that the rich do during a recession is that they buy stocks at the bottom. Because remember, when we're at a point of recession, people are spending less. Okay, because people are spending less, there's less money circulating, the price of goods drop, the value of businesses drop because, as I said, people are not spending, the share prices are down. And that's when the rich commonly go out, they go shopping. So instead of stocking up on things like toilet paper and canned goods, the rich go and buy some of the biggest companies in the world at a discount. So basically, a recession is Black Friday for rich people. This is one of the things that we took advantage of ourselves during the downturn. And if you were my client during that time, we you would know that we made some good money, especially when during the downturn, during lockdown, we find oil prices were down. So what we did, we invested in unit trust and indexes tracking that commodity. And when things slowly started getting back to normal, the demand for oil increased, the price of oil increased because price is linked to demand, and you made a killing after that. So prepare yourselves. We're expecting a recession. We find that the US is talking about a recession already. They're expecting it in the third of fourth quarter, even as late as the first quarter of 2023. So brace yourself. There's opportunities coming. The next thing the rich do is that they buy bankrupt companies. What if you're a large company and you could purchase a fraction of intellectual property into that company? Fully trained employees, raw materials that you would normally pay a premium for, and you get it at a fraction of a cost. I'm keen for something like that. So big companies are swimming in the market, waiting for their competitors or rival businesses to actually collapse so they can pick up the scraps for cheap. Think of airlines. We saw that Kulula went down recently. People are going to buy those planes and they're going to buy it at a discount. And Kulula had about 40% of the local market. And they're going to capitalize on that. And we see SAA now increasing their flight load to try and get some of that market share that Kulula once dominated. And we found that in the leisure industry as well. A lot of leisure businesses went down. B&Bs, small restaurants, they had no customers, but the bills were just piling up. I think one of my favorite things that the rich do, and a lot of us in the middle class are doing as well, is to buy property dirt cheap. Okay, companies are not going to be the only thing that are struggling. And unfortunately, people that bought property when the interest rates were low and they just bought the property for the sake of the low interest and not really planning their purchases, as we can see, we know in our country, right? Jobs are a problem. Unemployment is a problem. And unfortunately, people that can't keep up with those payments, their houses are going to be repossessed. And that's when the rich come in. The people with means come in and try and buy these properties on the cheap. It's a very simple process. It's an unfortunate process, but I mean, somebody has to complete the cycle. When a recession comes along, people are scared. Some people lose their jobs. People are struggling. Nobody's splurging on anything. There's little demand from the masses. Prices drop because normal people can no longer afford stuff. The rich come in and they pick up everything of value at the fraction of the cost. And we found that a lot of property millionaires came out of the 2008 recession. So although at that moment, the hardest hit is commercial real estate during a recession, the biggest drop we'll see could be in the new residential developments, where developers have been building like crazy, more often than not on credit, assuming demand will be there when the building is over. But with people unable to buy, the banks will come knocking on the door for the money they are owed. And if you could buy the property you're living in for half the price it's worth, why wouldn't you? Another thing that happens during recession is that it's cheaper to do business, okay? Unfortunately, there are more and more people that are looking for work, and this is like regular in our country, recession or not. It forces you to trim the fat if you're a business owner. Cut off who you need to cut off. And a ton of people, unfortunately, are going to get laid off. Those who get to keep their jobs are thankful. The costs of doing business have dropped significantly if you don't have to carry the fat. And we see government, they're in the situation now, they can't trim the fat. Government workers are demanding more, 7%. Eskom is demanding more. They have us on basically a chokehold at the time of recording this podcast. All right, so the cost of doing business during a recession creates this imbalance of power in the market. More people are looking for work. The cheaper it is to hire and the less you have to pay your employees, because there's always a bunch of people waiting in line at the door to take your spot. Then there's low interest rates. And I know we're in a cycle of getting into higher interest rates in South Africa, but our interest rate is still below the pre-COVID, the pre-lockdown levels. And as recession tightens up, I know we're not there yet, but recession will come. And when recession comes, we'll find interest rates will be lowered because, remember, the Reserve Bank, they have this balancing act to do. Right now, as we speak, inflation is very high, and to curb inflation, they have increased interest rates. And that's the only thing you can do. Your interest rate has to be higher than the rate of inflation to curb the spending and to bring the price of goods and services under control. But in a recession, people are not spending. They don't have the jobs. They don't have the money to spend. So we'll find that the Reserve Bank will then lower interest rates to try and stimulate spending among those people that still have constant cash flow. And hopefully that money basically trickles down. Because if it's in a recession and you're doing well, you buy a property, then you need to fix up that property. You do some tiling, you do some painting. Obviously, you're going to use local guys who have been struggling. They're going to get paid, buy things for their families. And that's how the money circulates in the economy. So when the interest rates are lowered, so rich people can simply borrow money at a very low interest rate. So if you are keeping a clean record, not getting into high consumer debt, keeping a great credit score, as soon as these opportunities come, you are able to leverage that and get some cheap financing to get into property. And that's a massive competitive advantage. So this allows the rich to refinance everything without worrying that the bank will load you money. So you can take advantage of the downturn in the market just because you've proven that you're able to pay it. And in the words of the great Jeezy, you know what's more important than throwing money away at a strip club? Credit. And then there's insurance. Now, you might be scratching your head at this one, but so if you're familiar with tennis, the Wimbledon tennis tournament over the past 20 years, they have taken pandemic insurance. So in the past 20 years or so, they spent around $30 million so far in insurance cost. But the payout from the coronavirus claim was in the ballpark of $140 million. So that's like a profit of $110 million right there. And you find more and more businesses taking these kind of pandemic insurance. And in South Africa, we have a little bit of a problem. Well, it's more than a little bit of a problem. Lloyd's of London, their public insurance rates are very high. They increased by 1,000% because they say we're going to have, in the next couple of years, we're going to have a bigger riot than we had in July 2021. There is a huge likelihood of that happening, and our premiums have been increased because of that. Now, there are many businesses out there that have been paying specific attention to this type of insurance. We find that the short-term insurance industry have seen a surge in demands for these kind of insurances where they're insuring against a pandemic. Another thing that the rich do is that they move their money into tax-efficient solutions. Because remember, if you're holding cash and inflation is high, inflation is eating away at that money. So the rich want to move that into tax-efficient solutions. A very popular thing that the rich are doing during a pandemic is to invest in businesses that thrive during a recession. And since we are in the age of the internet and e-commerce, the most thriving sectors during this pandemic have been the sectors of e-commerce, with a focus on food and product delivery. People like Amazon, Takealot, YouTube, Netflix, and so on. Those kind of businesses have just surged during the pandemic. So by investing in these kind of emerging businesses and these types of sectors, they've managed to leverage a lot of their money. Another thing that they look at is startups. And, before 2008, we didn't have things like Uber and Airbnb. All right. So they invest in these kind of tech startups that have the potential for growth. And there's tons of that. There's tons of growth in the fintech space, for example. And Naspers is very good at doing this and at identifying those kind of tech platforms, and they invest in it at a startup level. All right. So those are just some of the ideas that I have for you today on what the rich do during a time of recession. If you have any ideas, let us know. We'd love to know about it. Type it up where you're listening to this podcast. Type it up in the comments or even drop us a mail. It's yolanda@financiallyfabulousfemales.com. If you have any questions, any topics that you would like me to cover on the Wealth Nation podcast, anybody you'd like me to interview, ask questions, trusts, wills, asset managers, all kinds of things, you let me know and we can have them on the show. So that's it for today on this week's episode of the Wealth Nation podcast. I'll talk to you next week.